We are starting a series of product knowledge. We call it mini series program. And when I say we, it means that Partner Health Management as a registered insurance agency, as a PIAM approved registered agency with their insurer, they are committed to provide product knowledge and relevant information for any interested people, whether it is a potential policyholder or an existing policyholder or someone who is just interested to know more about medical insurance and other products that they are marketing. I am a technical advisor on a personal capacity to Partner Health Management. The talk contains my independent views and understanding of the products based on the policy documents provided to me. The insurance product is not designed by me, and I'm not involved in the designing or pricing of the product. So for further clarifications of anything else that you need to know, you should refer to the insurer through the assistance of Partner Health Management, which is the registered insurance agency for this product. So what is a comprehensive medical insurance? What's the difference between medical insurance and health insurance? Medical insurance and health insurance are slightly different because health insurance is a wider category. It has to do with any form of insurance that's relating to health, such as critical illness insurance, such as disability income insurance, such as medical expense insurance, such as hospitalization, clinical, or maybe in some countries they call it insurance for some kind of medication, special medication. So these are all coming under health insurance. But medical insurance relates really only to an insurance that deals with medical treatment costs. So when you want to look for a comprehensive medical insurance, you need to look for policies that meet your needs, and policies that are good have a few important features. One of them is that this kind of insurance has very few sub-limits in the policy. In other words, there are very few items that they try to limit the coverage for the items by saying that this amount is limited to only 3,000, this claim is only limited to 5,000. So there are a lot of sub-limits inside the policy, means the policy is not as good. Then a policy that's good is a policy that has very high per disability limit. If possible, a policy with no lifetime limit. And it is important to have a policy that's guaranteed renewable in its feature, so that when you get unhealthy, they cannot refuse to renew a policy. And it's also important because of inflation to have policy that is able to cater for future inflation. And it's also important to look for policies that uses what we call portfolio pricing. In other words, they won't penalize you for making claims. Any increase in premium will be shared across board by all policyholders. Okay, so we are talking about MediSaversVIP Prime. The insurer for this product is Lonpac Insurance, and this product comprises of Section A and Section B. Section A is a basic cover, is a compulsory cover, but Section B is a top-up cover and is optional. You do not need to have Section B if you don't want to. But if you can afford it, Section B will drastically enhance the coverage. Now, if you look at Section A, it covers 4 plans ranging from $150 to $500 room and board. You will notice that the per disability limit is very high, ranging from $150,000 to $500,000 per disability. And the overall annual limit is 3 times the per disability limit. This is something that is very unique because it's high limits as I been talking about. Okay. Now, if you go on further, you'll find that for when a person is admitted to hospital, this policy does not have any sub-limits. So everything is in list is as charged, subject to reasonable, customary and necessary expenses. So if you look even concerning while before hospitalization, while in hospital, and subsequently all the other benefits, you realize that it is generally as charged. There may be time limit in terms of the number of days, but it's as charged as far as the expenses are concerned. Another special feature about this product is that for outpatient cancer treatment and outpatient kidney dialysis, is not subject to any sub-limit also, which means it is as charged as incurred during the period of cover up to the per disability limit. So this is very, very unique and comprehensive. Now, other than that, there is also daily cash allowance for government hospital ranging from 100 to 250 ringgit per day, and there is also hospital admission assistance to get admitted to the appointed panel of providers. So Section A has an option which is something that's very unique in this product, whereby if you find the premiums are too expensive, you can choose the Section A cover with a deductible. The deductible is per disability, which means that for one disability, you only have to bear the deductible one time. And if you choose a deductible of different amount, the premiums will be adjusted significantly. The higher the deductible, the lower the premium. This deductible is not applicable on the top-up cover, but it's applicable only on the Section A cover. Now, if you look at top-up cover on Section B, top-up cover is something that sits comfortably on top of Section A. As long as you have exhausted all limits in Section A, Section B gives you a top-up cover up to 1 million ringgit per disability. And this 1 million ringgit per disability increases by 100,000 every 3 years. So this product is about almost 3 years old. By the middle of this year, I think by July, you will find that the premium will be reviewed and the coverage will automatically increase to 1.1 million. By doing so, this product, if it has got a top-up option added to it, very adequate to handle future medical inflation, because the coverage increases every 3 years to cater for medical inflation. And all the other coverage are as charged like in Section A. And so let's look at renewal. So now we have seen an overview of the product. Now let's look at, is this product fitting what we talked about just now? By looking at the overview, you'll find that this product is comprehensive, it's got high limits, adequate, but then in terms of renewal, is it guaranteed renewal? So this product is for people who are up to the age of 70 and is renewable up to 100 years old. Very important is that this product is renewable at the option of the policy holder. That means the policy holder is the one who decides whether to renew or not to renew. The insurance company cannot refuse renewal. So in effect, it is guaranteed renewal. So at the stage of renewal, the insurance company also cannot make changes or amendments to the terms and conditions applicable to the renewal policy. Which means that if you come in young and healthy and there's no loading and no exclusion, the insurance company cannot subsequently make loading or exclusions applicable to your policy after you have made some claims. You will not be subject to new loading or new exclusions. So, of course, there is something called a portfolio withdrawal condition, where the insurance company may find that it's no longer viable to run that product and the product may be withdrawn, but it can only be withdrawn with Bank Negara's approval. Now, there is something called an amendment clause, which doesn't really affect you in a big way because you are protected by the fact that there is no new terms applicable to you on renewal. But the amendment clause is subject to the foregoing. What is the foregoing? The foregoing is what was said before, that on renewal, they cannot change the terms and conditions of you. But the company reserves the rights to amend the term and conditions and provisions of the policy as a whole. This is to cater for change in regulations, change in guidelines, change in so-called regulatory requirements, which may require certain amendment to the policies. And so the policy may be amended as a whole, not on the individual policy holder alone, because the no loading, no exclusion is already confirmed to be effective. But subject to that no loading and no exclusion and no change in terms, if you come in without loading exclusion, this policy may be amended as a whole, but all amendments will need Bank Negara's approval. This policy also has something called the succeeding policyholder clause, in the sense that if you insure a child become an adult, this policy will automatically be transferred to his name as the policyholder. Or if you insure a child under your name as the policyholder and something happens to you and you pass away, your spouse will automatically take over as a policyholder, so that your child remains continue to be insured without any gap in cover. So this is something that's important as far as the renewal condition. Remember, we said besides high limits, you want to have something that is guaranteed renewable. Alright, now let's look at the uniqueness. Why is this product so unique? The first thing is this product is unique. It's because the premium is comparatively cheaper compared to other products in the market. And the premium can only be cheaper if it is supported by claims experience that are better than what's outside there. Every premium that's calculated has got to be supported by data, by claims, by experience. So if you look at the coverage and do a comparison with others, you'll find that the room and board is affordable, because you see the room and board ranges from 150 to 500. Then you find that there's high per disability limit. So you have a high per disability limit between 150 to 500, and you have a high overall annual limit. But just now we said you want one that has got high overall annual limit, or if possible, no overall annual limit. So in this case, there's a high overall annual limit on the basic cover, but later on you'll find that if you buy the top-up cover, there is actually no more overall annual limit on the top-up cover. Alright, so then there is little or no sub-limit. In this case, there's no sub-limit for outpatient cancer treatment and no sub-limit for outpatient kidney dialysis. And if you were to look at the premium that is existing now before the next repricing, the existing premium, if you do a comparison of what it is that you see here compared to what you see in other products in the market, you can immediately see how this premium is compared to what's in the market. However, for better cover, you may buy a top-up cover, and the top-up cover premium is extremely reasonable, ranging between just 100 to 200 ringgit for that additional 1 million cover according to the age band. If you do a comparison now of a cover that is without deductible, and assuming now you look at the age of 36 to 40, which is one of the most popular band, and if you look at 36 to 40 and plans, let's say plan 300 is 1,515. But if you were to take that cover with a 3,000 deductible, it becomes 1,136. And if you take a deductible of 6,000, it becomes 833. And if you take a deductible of 10,000, it becomes 606, almost more than half. So you can see how now from the 4 plans that you now have actually 16 plans. 4 plans without deductible, 4 plans with 3,000 deductible, 4 plans with 6,000 deductible, and 4 plans with 10,000 deductibles. So from the 4 plans, you now have 16 plans. So you can see now that this is unique because you have affordable room and board, you have high per disability limit, your high overall annual limit, and you have no increase in limits every 3 years for Section A, but you have the option also to have deductible, which decrease your premium substantially. This product has got greater flexibility. You can choose Section A and choose the deductible, which means that you can have 16 plans instead of 4 plans. And then on renewal, you are allowed to change your plans during renewal. You can change your plans from higher room and board to a lower room and board, or lower room and board to a higher room and board, or one without deductible to one with deductible, or one with lower deductible to a higher deductible. So this flexibility will allow you to then be able to manage your coverage according to your affordability, making sure that you do not lapse your policy. The principle behind switching is this: if you move from a less comprehensive cover to a higher cover, you'll be subject to re-underwriting. If you move from a higher cover to a lesser cover, you will not be subject to re-underwriting. Now, there is no fixed time for premium review also, because some products in the market fix a time that every 3 years you are going to review the premium. In this product is unique in the sense that there is no fixed time to renew. They will only review the premiums when it is necessary and when the claims data prove that the premium that they are charging is no longer able to support the claim strength. However, premium change requires regulators' approval and notice must be given to policyholder. Now, to cater for inflation, this is where Section B kicks in. Section B kicks in by having a cover of 1 million sitting on top of Section A, and that 1 million cover per disability increases by 100,000 every 3 years. And you'll notice this section of Section B does not have an overall annual limit, which means that from various different disability, you are not subject to an overall annual limit as to the total amount that you can claim in 1 year from all disability is not limited. This product is more stable compared to many products in the market because the portfolio that you have for this product is very, very big compared to what's in the market. It's in the tens of millions of premium. So because of that, this product is more stable. Most of the people in this product have also joined some membership by MediSavers, which provide them annual blood tests. And by undergoing annual blood tests, these people who have chosen to be members of other programs by other organizations using the MetaFin platform will actually result in more stable portfolio. Now, one other thing that we have to bear in mind is that there is a new change in the accounting standards. The International Financial Reporting Standards has placed upon insurers the need to actually treat unprofitable portfolio in certain ways. And what they are supposed to do is that for those products that are losing money, they have to account for expected claims in their books even before the claims come in. Because of that, this product is designed in such a way that it helps mitigate this problem, and it allows the insurance company to review premium before it hits a danger level, as well as to make sure that the coverage is not drastically affected by reviewing the basic cover. They only review the top-up cover with increased coverage to take care of future inflation, of which that portion, the premium, is not significant. So with that, the uniqueness of this product is that it's cheaper premium, greater flexibility, no fixed time for premium review, caters for inflation, portfolio is more stable, and there's lesser impact on IFRS.